Good morning and welcome to our webinar this morning. Lovely to have you join us on a bit of a cloudy day outside here in Sydney. Today I'll be explaining to you how you can access the latest stimulus package measures with particular focus on the job seeker scheme that was announced just late on Monday. I've got some worked examples for you that we'll go through and plenty of time for questions. I've had a lot of questions posted before the webinar, but I certainly will take your questions as we go along today. My name is Jeni Wilcock and I'm a Director of Sullivan Dewing Chartered Accountants and Business Builders based in Caringbah, for those of you that don't know me. Today's webinar follows on from the huge response we had from our webinar last week, and I certainly thank you for all the lovely and very kind feedback we've received from that webinar. So we know now our time at the minute is prolonged, it's difficult for businesses, it's difficult for individuals, and the important thing for all of us is knowing what help is available and then knowing how we can access that help, and that's what today is all about. I'll shortly share our live presentation with you, and next to the share button on the bottom of your screen there will be a chat box that you can post your questions to as we go along through the presentation. Now, just reminding you, you're all on mute. You can hear me, but I can't hear you, so be kind. Don't laugh at me. It is April Fool's Day, I get it, so don't play any jokes on me. I did hear it was cancelled this year, by the way. All right, let's get to it. Okay, so you should be seeing up on your screen now our PowerPoint presentation, and this has actually been emailed to you as well already, so somehow if it's not coming up on screen, just have a look at your emailed copy. Just give me one sec, guys. Lovely, look at that. First technical glitch overcome. All right, so a little bit of housekeeping with you before we kick off. So I've mentioned submit your questions as we go along. I've let you know that the presentation slides have gone out to you already. Now, following this session today, we will send you an email which will give you a link to this recorded session, as well as our contact details if you don't have those already. So what we're going to look at today, we're spending most of our time this morning on the JobKeeper scheme, the new scheme announced on Monday, aimed to get some additional income into people's bank accounts. We'll have a quick look at the $100,000 business cash boost. We'll spend some time with focusing on landlords and tenants and what the new measures are there and what is available for relief. Having a look at traineeships and apprenticeships very briefly, and only a small amount of time on the small business asset write-off, accelerated depreciation, reminding you of what the ATO concessions are, and I'll share with you some successes that we have had on those concessions in the last week, and plenty of time there for our questions today. So let's get right into it. Our JobKeeper payment. Let's differentiate between the job seeker payment provided by Centrelink for people that are unemployed. This is the JobKeeper payment. So interesting that the wording is very similar. So who is eligible is what people want to know. So the employees that are eligible are employees that are full-time, part-time or long-term casuals. They have to have been a casual with you for 12 months or more to be eligible to receive this payment. It also applies to any employees that have been stood down. It only applies to Australian citizens, permanent residents, and it excludes some temporary visa holders. Now, if you have specific employees on say, for instance, the 457 visa, you might need to get some legal advice on whether it applies to them or not. Now, they needed to have been employed by you as at the 1st of March 2020, and they need to be at least 16 years of age. Now, they can only receive one JobKeeper payment. So if you have an employee that works for a number of different organisations, they can only receive this payment from one of those organisations. So what happens is the government pays into the business the $1,500, and they have to pay that same $1,500 out to the employee. So if that employee was on a wage that was less than $1,500, at the minute the legislation says that they get paid that $1,500. Now, that's going to be interesting if they were, let's say you had an employee that had worked for you 1 day a week as a casual for the last 5 years. Now, they're going to be on less than $1,500 a fortnight, but you'll be, at the minute, you are required to pay them $1,500 a fortnight. Let's see if anything else comes out on that, but that's the current requirement. Now, super doesn't apply to any additional JobKeeper payment. So, for instance, if you were paying an employee $1,300 a fortnight and you're now paying them $1,500 a fortnight, you only need to pay super on that additional payment between what you were paying them, the $1,300, and what you are paying them now, the $1,500. I have an example to go through for you on that shortly. Basically, if you wanted to pay them the extra super on the extra payment to them, then you are able to do that. And you also still need to pay super on the employee's usual wage. So if you're running your business now and your business is still going, albeit in a reduced capacity, and your employees are still working for you, then you pay them their usual wage, you pay super on that wage, and you get the subsidy from the government to help you to continue to employ them. I'm sure we'll get a lot of questions on this. There are a lot of different scenarios, but that's the basic principles. So the JobKeeper subsidy, this is taxable to the employee as a wage, just like their regular wage is. It's included in their annual payment summary that they receive from you at the end of the year, or receive through MyGov these days. Now, the employer, you guys as the employers, you withhold tax on the payments just like you do wages. If you didn't withhold tax, then the risk is that your employees will receive a tax bill when they lodge their tax return at the end of the year. So you need to withhold tax. Essentially, this payment just goes through the payroll system. Now, if you've got an employee that's receiving any Centrelink benefits, let's say, for instance, they've been stood down and they've gone across to Centrelink and applied for the JobSeeker payments, then they need to advise Centrelink that they're now receiving the JobKeeper payments. And mathematically, they will actually receive more money if they get the JobKeeper payments through you, their employer, than they would if they were receiving JobSeeker through Centrelink. This JobKeeper payment goes for 6 months. And as employers, you need to let your employees know that they are that part of the income that they're receiving, or all of the income that they're receiving, is the JobKeeper income. So which businesses can apply? And this is an area where we have already had many questions. There's a turnover test. So what the turnover test says, that if your business has turnover of less than $1 billion, so that's going to be many businesses, you have to have a drop in revenue of greater or equal to 30%. Now, that drop in revenue applies from 1 March and it's tested over a minimum of 1 month period. So if you were choosing that minimum period, you could test March 2020 versus March 2019 to determine if your business revenue had dropped 30%. If it has not dropped, because there's a lot of businesses' revenue that hasn't dropped yet quite that much, then you keep testing. So add together March and April, March, April, May, March, April, May, June, and just keep testing until you do see that drop below 30%. It's only when you get to revenue, a revenue decrease of greater than or equal to 30% that you'll be eligible to get the JobKeeper payments for your employees. This puts a number of businesses in quite a difficult position. So we've got businesses out there being very creative and working very hard to try and source new ways to bring revenue into their businesses. And I'm hoping that that businesses like that will still be able to access this JobKeeper payment to help keep them going as well. So another important point, and one that's also brought many questions, is what happens if we have businesses that are structured as partnerships, trusts and sole traders. These businesses are also eligible for this JobKeeper payment. I've got some more detail coming up on that as well. And basically, we report this information to the ATO. When you run a pay run in your business and you lodge that through single touch payroll to the ATO, that's how they know how many employees that you have, and that's how they generate those payments. Different for a partnership, trust and sole trader. Again, we'll cover that shortly. So the subsidy is paid by the ATO from 1 May. It's paid monthly in arrears, and if you can satisfy their criteria, it's backdated to 30 March. You apply for the payment online. Now at the minute, the best thing that you can do is actually register your interest. And I believe last night there was about 300,000 businesses that had already registered their interest. So I jumped online very early yesterday morning to test it out. And it's a very simple form where you just put your name, your email address, your mobile phone number and your ABN. And then late yesterday, I received a text message confirming that they had received my registration, but that's all the details that there is right now. It's basically an expression of interest. So I would encourage you, I've listed the website there on the PowerPoint, I would encourage you to go and register your business. Doesn't mean you're going to be eligible, doesn't mean you're going to get it, but it means that you're going to receive information from the ATO on what to do next. Okay, so we have many businesses out there that don't have employees, trust, partnerships, sole traders, for instance. So those businesses also should register their interest with the ATO. And what will happen is what the ATO has said is that the individuals that are associated with those businesses are the people that will receive payments. So if you are a business with employees, your criteria with the ATO is met when you lodge single touch payroll, and that's how you advise them how many employees you've got and who should be receiving payment. For other businesses where we don't actually have an employee, you will actually be lodging income numbers with the ATO on a monthly basis to show them that your revenue has dropped and has continued to be at low levels. So employees are through single touch payroll. Where we don't have employees, it's through lodging once a month with the ATO your revenue numbers from the business. This is all really new. Remember, this was only announced late on Monday, so more details will come. This is what we know right now. Okay, first example for you. So we have a sole trader florist who has been operating for several years. Melissa, our florist, has no employees, and she expects her turnover to drop 30% compared to the same month in last financial year. So Melissa will be able to apply for the JobKeeper payment, and she will receive that $1,500 a fortnight directly, paid by the ATO to her. So let's say you are a business with 5 employees. We've got Peter here running a landscaping company, and he employs 5 full-time gardeners. So he's currently paying his employees $1,700 per fortnight before tax, and he is expecting that his turnover will decline by more than 30% in the coming months. He knows that he's going to have to lay these workers off or reduce their wages significantly. So as a result of registering and being eligible for the JobKeeper payment, Peter will be able to continue employing all of his gardeners, all of his 5 gardeners, and he needs to only pay them $200 per week, per fortnight, I beg your pardon, before tax, as the employer will get the he'll get the $1,500 from the government for the JobKeeper payment. So what happens with Peter is he has to pay super on the $200, but he doesn't have to pay super on the $1,500. Now this would be in an instance where Peter is keeping these people employed. He has not at the minute laid these people off. He still has them employed, and that's why he is paying the additional $200 to them, and that is why he is paying the super on the $200 as well. So different to the business that has laid off workers that doesn't have any income coming into their business. This is a business that is still going and still producing revenue. Okay, so the example where we have a business where the employees have been stood down because that business has been forced to close or has very little revenue. So we have Susie running a beauty salon who normally employs 3 permanent part-time beauticians. She's been forced to stand them down without pay, and her turnover has certainly declined by greater than 30%. So she's eligible for the job seeker support. So what Susie will do is she will receive the $1,500 from the government, and she will pass that straight on to her employees for the next 6 months. When the business picks back up, she'll be able to resume their employment quite quickly because she's maintained that relationship with them. Now, they were stood down, so she doesn't have to pay the super on their $1,500. Different to where the employer continues to employ and continues to use the services of those employees. They do pay the super, but where the employee has been stood down and the business is merely passing on the $1,500, that's where they don't have to pay the super. Okay, so that brings us to the end of the JobKeeper part of this presentation. There will be a lot of questions, I understand, and they've already started coming through. I will answer those at the end. We'll now cover the boosting the cash flow, the $100,000 cash injection to businesses by the government. So where this applies, this is up to $100,000 with a minimum payment of $20,000 to eligible businesses and not-for-profits. So an eligible business is a business with a turnover of less than $50 million that employs people. And the employer will receive a credit of up to 100% of the tax withheld on the salary and the wages, call it the pay-as-you-go withholding. Now, they'll receive $50,000 of that credit before June 30 and $50,000 of that credit after June 30. And the amount of that credit is linked to the tax withheld on employee wages. So after June 30, what happens is there are either 2 or 4 additional instalments paid. So if before June 30 you received $50,000, then after June 30, I'll cover this for both a monthly and a quarterly lodger in a minute, but a monthly lodger will receive 4 additional instalments and a quarterly lodger will receive 2. So what's important to know here is that this incentive is credited to your integrated client account. It is not a payment made directly to your business. It's also a payment that is tax-free to your business. Very helpful at the minute. Okay, so let's say you're a monthly lodger. Now, a monthly lodger is a business that pays more than $25,000 per annum in pay-as-you-go withholding on employee wages. So you lodge your monthly IAS, and let's say you have $15,000 in pay-as-you-go withholding and you've lodged that on your March BAS. The ATO multiplies this by 3 and credits your integrated client account with $45,000 in April. Then in April, you lodge your instalment activities. Then you lodge your April instalment activity statement in May with a further $15,000 in pay-as-you-go withholding. The ATO credits you another 5 and then you've received the 50 in total. So the March BAS, the pay-as-you-go withholding is multiplied by 3 and that's the amount that gets credited to your integrated client account. When you lodge your next instalment activity statement in May, that's where you get your next payment from the ATO. Now, if, for instance, you hadn't used up your full $50,000 by lodging the April IAS in May, then you would lodge the May and receive a further payment in June, and then you would lodge the June BAS and receive a further payment in July, up until you have maximised your $50,000 available credit. Now, not all businesses will get up to $50,000, that certainly is the case, but it's important that you maximise that as much as possible. So that's the stage 1 payment. The stage 2 payment is basically whatever you have received as your stage 1 payment, split into 4 and paid to you in equal instalments during July, August, September and October. So if you've received 50 up until June 30, you'll get 12.5 in July, August, September and October. Now, with our quarterly BAS lodgers, what happens with these people? A slightly different mechanism here. So you lodge your BAS quarterly. Let's say you only have $4,000 in pay-as-you-go withholding on that March BAS. So what the ATO will do is it will credit you $10,000 in April because $10,000 is the minimum payment that it will pay out. Now, what happens then? So in April, you've received 10. Then you go ahead and lodge your June BAS and you've got another $4,000 in pay-as-you-go withholding. The ATO will give you a further credit of $4,000 based on that June BAS, and your business will then have received $14,000 of that subsidy. So that's your stage 1 payment. Now, the stage 2 payment for these people, our quarterly BAS lodgers, that they will receive a payment of $7,000 in July and $7,000 again in October to match the $14,000 that they had received prior to June 30. So the monthly lodgers receive 4 payments post June 30. The quarterly lodgers receive 2 payments post June 30. But in both instances, their second payment equals their first payment. Now, very important for us all to be aware. So the ATO has broadcast that we are not able to falsely boost these pay-as-you-go withholding amounts for any of these months, particularly the months on the March BAS, April, May and June IASs and BASs. They are on the lookout for anybody that has registered as an employee after the 12th of March. And very important that we adhere to just running our businesses in the usual way without falsely magnifying the payments on these activity statements. Now, I will say that also, if, for instance, it's quite usual in your business that you would pay performance bonuses, then it may be that because your business has had a good trading history up until now, you may deem that it's appropriate to pay some performance bonuses for your employees, yourself being an employee as well, on that March BAS, if that is your usual business practice. Talk to me more about that as you need to. Landlord and tenants. So we've got a lot of heightened anxiety for our landlords and our tenants at the minute, and certainly we're fielding many questions from clients, but on both fronts, whether they're landlords and tenants, on what they can do. And you know, there's a lot of businesses that just can't pay their rent that have applied back to landlords for rent reductions or rent easements. Many of them actually haven't had responses yet. Some have. So there's a variety of different ways that people are dealing with this. So if you're on the let's look at this from the landlord's point of view first. So you're the landlord. You've been approached for a rent reduction. So what you need to think about is if you grant that rent reduction, how is that going to financially penalise you? And the biggest thing for landlords is, how do I pay my loan repayment if I don't have the rent coming in? So what you need to do is you need to talk to your bank. The banks are quite open at the minute to a 6-month loan deferral or putting those loans back to interest only. So what the government is trying to do is they're trying to get everybody to share this financial burden, and by allowing the banks to defer, or suggesting to the banks that they defer these loan repayments for 6 months, it opens the door for the landlords to be a bit more generous with their tenants and approve those rent reductions. Now, one example I came across with one client when they applied for a 3-month rent-free period. What the landlord granted was 3 months rent-free for now, no problems, but later repay that 3 months over the next 6 months to catch it up. So there's some people that apply for the rent-free and get granted the rent-free. Some have received a rent reduction, a 50% rent reduction, and this is just another option. So just be creative to what works in your particular circumstances, but we certainly need to be open to allowing our tenants some rent easement in this period. I think the main focus for landlords is you want to continue to have that tenant after all this passes. So an easement of the rent will certainly ensure that. We have a lot of clients, and a number of you on this webinar hold commercial property or residential property in your self-managed super funds. And one issue that we've had is where we have the trading business that is related to the super fund. We have quite strong CIS legislation that basically says that if no rent is paid, then that is going to be a problem when it comes to audit time for your super fund. What has just been announced in the past week is that the ATO has confirmed that super funds can provide temporary rent reduction to tenants, and that includes related party tenants. So if you run your trading business in one entity and you own your commercial property in your self-managed super fund, then you are able to provide temporary rent reduction to your tenant, which is the trading business. Now, the ATO have said that they won't take any action on this for either this current financial year or next financial year, which is a real bonus for us. So what we suggest you do is that you document, so the tenant needs to write a letter to its landlord, being the self-managed super fund, and outline the rent reduction that they are after, and outline why they're after this rent reduction due to the market circumstances. Other businesses are acting in this manner as well. You just need to have support for what you are asking. So the super fund would then acknowledge the letter that has come from the tenant and approve that rent reduction. And then you've got your paperwork that you will give to your auditor when audit time comes that will grant you this this amnesty from the usual self-managed super fund rules. So very pleasing to hear that development. Tenants. So what we have here is the New South Wales government has amended some legislation, passed some legislation to essentially say that tenants can't be evicted for 6 months, to provide some security to people that have really lost their revenue, their income or their business income. This applies to retail leases, commercial leases, residential leases, and also occupancy agreements. So really applies across the board that we can't evict any tenants for 6 months. Prohibits the recovery of possession of the premises, and just gives some security there to the tenants. So anyone that is there that is struggling to pay their rent, I've had a number of clients that have applied to landlords for rent reductions, but not heard anything back from those landlords as yet. So in those instances, they can not pay the rent to those landlords and know that they won't be evicted from those premises. Traineeships and apprentices. I won't spend very long on this, but just some detail for anybody that does need it. So we have a subsidy that was announced earlier than these latest measures, with a maximum payment of $21,000 to anybody that is employing an apprentice or trainee and had them on their books from the 1st of March 2020. They have to have less than 20 full-time employees, and they receive 50% of their wage from the period 1 January to 30 September. There's some details there on the slide of how you apply for that. Now, there's many employers that employ their apprentices through agencies like HIA. So what will happen is the agency will receive that payment and they will pass that on to you as the employer. Small business asset write-off. One of the government incentives which will most likely not be very heavily taken up. If you did have sufficient cash flow in your business to take this incentive up, you can receive an immediate write-off for assets purchased after 12th of March 2020 of up to $150,000. Now, a strategy we've been working with some clients on is if they are able to sell any current assets that might be ready to be sold, they might like to buy their new asset and finance that in full, so that they can receive the immediate tax deduction of the $150,000. I'm not sure how appropriate a $150,000 tax deduction is for businesses right now when we're struggling to make profit, but the incentive is there. Now, I have been asked a number of times on motor vehicles and luxury motor vehicles, but the tax deduction still applies to the motor vehicle deduction limit of $57,581. And just note that this instant asset write-off will drop to $1,000 from 1 July. The government also generously gave us some accelerated depreciation measures, which will apply for a further 12 months. So not just up to June 30 this year, but also to June 30 next year. And they actually might be quite beneficial to us in next financial year, when hopefully we're over this phase of our economy. So our accelerated depreciation gives us a 50% tax deduction for assets, and they have to be new assets. They can't be second-hand assets. The balance goes into a pool and you get a 15% depreciation deduction there. A few other things that our Prime Minister, Mr Morrison, has granted for us. I couldn't present today without a picture of the Prime Minister. Okay, so what they have done is anybody that has applied for JobSeeker, so we're back to JobSeeker now, not JobKeeper, they have increased the partner income test. So all the people that have gone down to Centrelink to get their JobSeeker payment, it's their family income which is tested, not just their own income. So the government has raised that to just over $79,000, up from $48,000. So that is the income test for the individual, and they have scrapped for the minute the asset test for the JobSeeker payment. Been some changes to foreign investment. It now has a 6-month time frame to be approved, and every foreign investment proposal now requires approval. A fantastic measure there. The Australian Banking Association has announced that banks have extended that 6-month loan repayment deferral to basically another 30,000 businesses. So they've raised the threshold of loan repayment deferral from loans of up to 3 mil to loans of up to 10 mil. So if you missed out before because your loan was above 3 mil, the threshold is now 10 mil. So if you are able to and want to do that, then you should apply to your bank for that 6-month loan repayment deferral. Just remember on these deferrals, interest is capitalised. It doesn't just go away. So the loan is there still accruing and building in the meantime. Oh, just one other point on that. So there have been measures passed that essentially say if you defer your loan, it won't impact your future credit rating, which is an important point for many people. So what we also have, another of the stimulus measures, is the 250k bank loan. So a week ago we didn't have a lot of detail on that. We've got a little bit more now. So this is the loan where the government guarantees 50%. Now that guarantee is for the bank, it is not for the person taking out the loan. So many of you work with mortgage brokers for your finance. Now the broker can apply for this loan for you, but it's not a loan that the broker will receive commission on. So the government is encouraging you to apply for these loans direct with your existing bank. You still certainly can use your brokers, but just know that's not a loan that they would receive a commission on as they usually would. Important to note as well that 250k is the maximum amount of loan that you would be granted. And we're not 100% sure yet, but some of the banks are talking about the loan being linked to the amount of expenses that you might have had on the last couple of BASs. Each of the banks will be slightly different on this, and they're going to, all these loans still have to go through the bank's credit departments. So certainly no guarantee that we're going to get these loans out. Now, what they're saying on these loans is that there'll be no repayments on this. If you get 250k, there'll be no repayments on the 250k, and the loan has to be repaid at the end of a 3-year period. So the interest will be capitalised as you go as well. So it all sounds great, but I think these loans may prove to be a little bit more difficult to obtain than first hoped. The ATO has come out and given many support measures for businesses actually, and this is an area where we are seeing some really good results. We've made many calls to the ATO over the last week, or really the last 3 weeks, and they are actually granting a lot of concessions to people. So if you do have issues on your ATO side, please either call us to call them or call them directly yourself, but there are measures available. So what the ATO is doing for us is basically they will defer the payment by 6 months of any amounts that are due, including BASs, income tax, FBT, any excise tax. It's not an automatic deferral though. So this applies to, it doesn't apply to old debt, this 6-month deferral. This applies to new debt. We'll look at old debt in a minute. So this is new debt. So let's say the March BAS. So you're due to lodge the March BAS, you can't pay the March BAS. So what you do is you go ahead and lodge it, and then we call the ATO on your behalf, and we request a 6-month deferral of that March BAS. One other concession that they've put in place is that you can change your reporting cycle from quarterly GST to monthly GST if your business is due a GST refund because its expenses are now more than its income. Now, I've not actually applied for that for anybody as yet. I'm not sure that that's going to be so widely taken up. Now, this is this next point, allowing the variation of the pay-as-you-go instalment. That's an important measure. So on the March BAS, you can vary that company tax instalment down to nil for the March quarter, and you can also do that for the June quarter. Now that will help. Now it's this next point here, which is really the one that's helping businesses the most at the minute. So if you have paid any company tax instalments on your September BAS, and your December BAS, we can actually claw those instalments back on the March BAS. So we've put an alert out to all the bookkeepers that we work with and to many of our clients. We would recommend that you run that BAS by us before you lodge it, and in fact that we would lodge it for you so that we can be clawing back those tax instalments that you've already paid. I would be thinking at the same time about your personal tax instalments that you might be due on your instalment activity statement for March and June, and whether they should be varied to nil as well. As these instalments come through to you, just talk to us and we'll work out the best plan for you individually. So the other thing that the ATO is doing is they are remitting interest and penalties on any debts that were incurred after 21 January. So I had one of my team members yesterday call the ATO on behalf of a client that owed a couple of $100,000 to the ATO, and what we have managed to do is we have managed to have a lot of interest remitted on that debt. we have a much smaller repayment put in place, and then we have a deferral on the current tax payments that they have. So that will assist this business, who is a business that has been affected by these closures. That will assist this business to keep going much longer, which is fantastic. So the ATO on another client, they have basically wiped the interest that they're charging on the debt, and they've put in place a $100 a month repayment. I think that this was only a smaller debt. I think it was down from about $800 a month, but still a substantial drop for this business. So the ATO is being helpful. We need to take advantage of that while they are being helpful. Okay, I did want to just to point out that there was some new regulatory protection from the government for businesses that really get into trouble. So basically the Australian government is allowing a 6-month regulatory shield for distressed businesses. They have increased the creditor demand threshold from 2K to 20K, and there is now 6 months to respond to demands and bankruptcy notices. And a really important point, there is now relief for directors from personal liability, from being insolvent, for GST, super and pay-as-you-go withholding payments. So just know if it comes to that there is 6 month relief there. Okay, we've got a little picture of Gladys for you as well. State government has provided us some support in the form of payroll tax. We basically have no payroll tax to be paid for the months of April, May and June, and they have also recently come out and deferred a further 3 months payroll tax for the months to 30 September. Now, I have heard that deferral essentially will be caught up at year end. It's basically no payroll tax for 3 months to June 30, but deferred payroll tax to 30 September. Applies for businesses with payrolls of less than $10 million. You can see there on the screen as well, the threshold for payroll tax is raised to $1 million from 1 July. And the state government will be spending some money on capital works, which will be necessary for us, we have no doubt. Okay, a couple of other measures that the federal government, that the state government announced recently. We've got 34 allocated to prevent homelessness. We've got a $30 million boost to energy account payments, $10 million to support charity. I've not got details there on which charities they are, and $6 million for Lifeline. So some further money coming out there, which is great. All right, now we are down to our very important question time. So I will stop sharing this PowerPoint with you, and I will be able to see the questions that you are posting. And I do thank you for posting questions. I have brought a number with me because we have had them flowing in thick and fast, as I'm sure you can imagine. Okay, let me just look at our first question. Okay, first question is, do employees accrue their entitlements such as annual leave, personal leave, RDOs if they're receiving the JobKeeper payment? Can businesses receive the cash boost and the JobKeeper payment? Okay, let me answer part 2 of that question first. Yes, businesses can receive the cash boost and the JobKeeper. They can also apply for the $250K loan. They can also receive the ATO assistance to defer their payments. All of these are separate measures that they can receive at the same time. The only thing that can't be received is actually on the employee front. They can't receive the job seeker from Centrelink and the JobKeeper from their employer. Now, as far as the accrual of entitlements, I'll have to come back to you on that. There is very little detail on this just yet. And any questions that I can't answer for you immediately today, I will send out when I'll send out answers to when we send out the webinar copy. Okay, next question for you. So please understand, everybody, that the government announced this on Monday afternoon, and the detail is quite scant at the minute. Okay, question is, reading from the list, on JobKeeper. Employing company is a standalone entity for that purpose only, but the employer works on other businesses. The income for the employing entity is purely the recharge of the wages cost to the actual business entity. How does the 30% reduction apply? So what again, there's no detail on this whatsoever, so it might be difficult to answer, but what the government has looked at across a number of these measures is the grouped entity, the consolidated entity. So I would hope for this exercise they did the same thing. So to explain that to everybody, if you have a trading entity and you have an entity that employs your people, and you might run it like that for asset protection purposes. So what happens then is the wages are paid in this company, but the revenue of the business is earned in this other company. And the other company pays a fee, like a higher fee, across to this second company to cover those wages. So the loss in revenue will be from the from the trading company rather than the employing company. It could in fact be from the employing company if the wages had reduced by 30%. That could be one test, but I would imagine that it would be a grouping measure. I would hope that it would be a grouping measure. I can't say for clarity. And that it would be the 30% drop in revenue from the trading business. As more details come about this, we will certainly pass them on. Okay, next question for you. Regarding JobKeeper. We've already cut staff hours by 20 to 30% to meet current resource requirements. Can we use the $1,500 per fortnight to pay down the employer's annual leave liability for the difference in hours worked? For example, 70% hours worked and 30% annual leave for the hours that aren't needed to work, because we don't need them 100% of their usual hours. Yeah, that's another good question. So what we've got here is, and this is what many businesses are doing, so we've got the employee that's not working full-time in the business at the minute. They are being paid some hours as pay and some hours as annual leave. So this $1,500 from the government is to help keep employers employing people, keeping them on the books. So because of what happens with this business here, so in your payroll, you're paying these people their annual leave and their part pay. You would continue to do that in the same manner, and the government would give you the $1,500, which then helps you keep paying those people. So in essence, the answer to the question is yes. If you are part paying annual leave and part paying salary, the $1,500 comes into your business to help you to continue to pay those employees. Next question. Okay, JobKeeper. Lots of questions on JobKeeper, as expected this morning. What if the business only opened since July and has been forced to shut down with a significant revenue drop from March? How is the 30% reduction calculated if you need to compare to the same period last year? Do you know, I saw an interesting question similar to this recently, and that was applying to startup businesses. That I mean, this does apply to startup businesses, but businesses that have not been trading for a long time or were still very much in their growth phases, and revenue wasn't something that they were showing a lot of. So at the minute, the test is that it's compared to the period a year before. So I have no clarity right now whether there will be any relaxing of that test. So it may be that these businesses are simply ineligible, which is tough, but it certainly is possible. Again, as more detail comes out, we will pass more detail on. Okay, next question. We have a business that has closed and stood down all employees. Can we now bring back some employees, such as maintenance and marketing, on reduced hours, so we only need to pay them the $1,500? Then stagger the other staff back, such as housekeeping and dining, when we reopen? Absolutely you can, and that's why the government's put this measure in place. They actually want you to put your employees back on the payroll. They want to, you know, we've all seen the queues at Centrelink. They want these queues to come back from Centrelink, and they want the employers to be putting the people back on the books and paying them this $1,500. So in your case there, when you are only paying them the $1,500 and they are just, well, that one is an interesting point with regard to super. If they are working for you to the value of $1,500, then you'll need to pay super on their wage. If you have stood them down because there is no work for them, and if you think in that case about your housekeeping and dining employees, they're stood down because there's no work, you can actually put them back on the payroll so that you are receiving the $1,500 for them and pay that to them, but you won't pay super on that payment. You've got to remember that the trigger for this $1,500 payment is the number of employees you have on your payroll that you submit to the ATO through Single Touch Payroll. So if you've let them go and you're not processing a payroll for them, then you won't be receiving the $1,500. But if you put them back on the books and you are processing the payroll for them, then you will be receiving that $1,500. Next question. Thank you for posting these questions. Please keep posting. Okay, a comment from one of our attendees. Our bank loans are above $10 million and the bank has willingly agreed to defer the interest. So the cap of 10 mil is not such a restriction. So that's good news. Thank you for that practical information. Question from one of our lovely bookkeepers. If you choose to swap to monthly BAS, can you swap easily back to quarterly later? I believe that you have to run the monthly for 12 months and that you can swap back after that. It's not an immediate swap back. Another good question, a question we've been asked many times. For the purposes of the JobKeeper subsidy, does a director count as an employee? When you are a director of a business, you usually have 3 roles in your business. So you have often the role as a director, the role as an employee, and often the role as a shareholder as well. So JobKeeper is linked to your role not as a director, but as an employee. So you need to be paying yourself wages, and you needed to have been doing that as at 12th of March to qualify for the JobKeeper subsidy. So if you are a director that doesn't pay yourself wages, that for instance only pays yourself dividend payments, then you will not qualify for the JobKeeper subsidy. But if you are a director that receives a wage through your business, then yes, you are also an employee, and yes, you qualify for the $1,500 per fortnight JobKeeper subsidy. Okay, just locating all these other questions, thank you. Just checking which ones I've covered and which ones I haven't. Okay, fantastic. All right, I do encourage you to keep posting your questions. So a very common question that I've been asked, I'm self-employed but the work has dried up. Should I apply for the JobKeeper or the Job Seeker allowance? So the amount that's paid through JobKeeper is higher than the amount that's paid through Job Seeker. So if you are a sole trader, then you would register your interest for JobKeeper and you would receive that payment through the ATO system, that $1,500 per fortnight. Another question, does the JobKeeper subsidy have to be repaid later on? No, it doesn't. It's a straight payment that flows either through the business to the employee or through the business to the business owner-operator, should we say. We operate our business through a family trust and we don't take wages. This is a very common structure where people run businesses through trusts and only receive trust distributions. They don't receive wages payments as such. Do we qualify for the Job Seeker subsidy? Yes, you do. You need to register your interest through the ABN of the trust, and when the ATO requests more information, you will list the individuals that are actually earning that income, and it's those individuals that would be eligible for the JobKeeper subsidy. My business revenue in March has not decreased by 30%, but I expect it to in April and May. Can I still get the JobKeeper payments? So what will happen is you will do your initial registration but right now you can't satisfy that 30% reduction test. You need to keep rolling those months forward and see when you do satisfy, because when you do satisfy is when you will be eligible to receive those payments. So even if you can't get it right now because this economic change hasn't hit you quite so sharply yet, it certainly may hit you more sharply in the next few months, and so you'll be eligible when it does hit you. My business is not required to report wages through Single Touch Payroll as I have a deferral. Can I still access JobKeeper for my employees? At the minute, the government has said that the only mechanism that they have in place to pay you this JobKeeper payment is through knowing how many employees you're currently paying. So I would suggest, even if you have a deferral for JobKeeper, I would actually be starting your single touch payroll now to get you onto that system so that the government can recognise that you are employing people and then pay you that payment. So I would start your single touch payroll now. Good question. We have an apprentice employed. Do we qualify for both the JobKeeper and the apprentice subsidy? And that is a very good question. One I was discussing with a fellow team member here at Sullivan Dewing yesterday. So yeah, that's an interesting one. I'm not sure that I've got a finite answer, to be quite frank. So let me okay, that's going to be one that we answer back at the end of the email. So leave that one with me for now. Next question. JobKeeper, the 30% reduction. If not the reduction from March 19 to March 20, it will roll forward, let's say March and April 19 to March and April 20. Can you just use April 19 to April 20? I would suggest so, or May 19 to May 20, whatever works to get you across the line. We've got to remember that the government's put in place these measures to help businesses, not to hinder them. So they say at least a month. So if you do have a month that you can compare back to a year ago, that is after 1 March, where you can show that reduction in 30%, then I believe that should be perfectly fine for eligibility. My tenants have asked me to put their rent on hold for 6 months. What should I do? I think I covered that in the presentation already, but you should certainly consider putting that rent on hold. You might go back and offer a rent reduction instead of a rent on hold. You might go back and extend the terms of the lease for that extra time, or you might make a payment plan for that withhold rent to be repaid in the future. A question that's quite relevant to our self-managed super fund landlords. I rely on the rent in my super fund to pay for my pension, but the rent has stopped. What can I do? So this is a very real example for many super funds. So if you have a super fund that owns property and that property receives rent and then you use that rent to pay your pension, if you're not receiving the rent, then you need to look at the other resources that you have within your fund. Difficult time to be selling shares, I would agree, but you possibly may need to look at share sales or using up any available cash. What you have to remember there as well is that the government has dropped the minimum that you need to withdraw for your pension from basically by 50%. So if you previously had to withdraw 4% of your balance, you now only have to withdraw 2%. So that will help you when your rent has decreased. It's going to be a challenging time for many people on many fronts, there is no doubt. Okay, does the month have to start from the 1st, or can you do month to month, let's say 20 March to 20 April? I'm not sure on that. They just say more than a month's worth of information. So probably yes. Again, we need some detail. Again, this was announced on Monday, so we don't have a lot of detail on this, and these, like, we don't have this finite detail just yet. So I would presume yes. I don't see why not, but it's going to come down to what form the ATO puts out that you need to have to complete to test the eligibility. We need to just stay tuned and wait for the ATO. One question that's been asked, is the JobKeeper payment per employee? It is per employee, it's not just once to the business. Do I need to pay my employees more than the JobKeeper payment? If your employees are coming to work and working, then you need to pay them what you would normally pay them for the work that they do, and then you use that JobKeeper allowance, that JobKeeper receipt, to help you subsidise the payment to the employee. So for instance, here at Sullivan Dewing, I've got my full team working and working flat out to help our clients as much as we possibly can. So my team, if we are eligible for the JobKeeper payment, my team are continue to be paid full-time, their full-time wage, and we would receive the JobKeeper payment to help us to continue to pay that wage. So you need to look at the activity of the employee as to what you are paying them. If they still are providing services to your business, then you pay them and use the subsidy to help your business pay them. If they are not providing services to your business and they have been stood down, then you just pay the subsidy. How does it work if some of my employees were paid less than $1,500 a fortnight before this? So as I mentioned earlier, if you've got employees that were paid less than $1,500, at the minute the government is instructing that you pay them the full $1,500. So they might have been earning $1,000 a fortnight. These people will now be receiving $1,500 a fortnight. So we've got to remember that the government is trying to get money into the hands of people that can spend it within the economy to keep all our businesses going. Now, we've only got a couple of minutes left on our webinar this morning, so if you have any final questions, if you could just post those and I'll get through as many as I can. Another question. Cash boost. What of the eligibility sounds like it was that you've earned income in financial year 19, or at least declared income on the BAS lodged from July 18 and before March 12? What about a mining company that's still seeking investment, so no real income yet? Still spending lots and has full-time employee, so lodging BASs with GST claimed and pay-as-you-go withholding, will the lack of income be a sticking point? The lack of income actually has nothing to do with the cash boost. The income of the business is only linked to the JobKeeper payment. So if you've got a mining company that's got no revenue but it's got wages, the cash boost is linked to what is paid in pay-as-you-go withholding on those employee wages lodged on the BASs. So even if you have zero income and you're getting a GST refund because you have expenses in the business, if you've got $10,000 in pay-as-you-go withholding that you report on that BAS, it's that amount of pay-as-you-go withholding that is linked to the calculation to get you that cash boost, which is good. Okay, fantastic. All right, so that will conclude our webinar this morning. So I would like to say thank you for attending. Thank you for listening this morning. I'm hoping I have answered many of your questions. Any that I haven't covered, we will attempt to send out answers as best we can when we shoot you a copy of this webinar. And I want to encourage you to keep talking to us. We are here. We are across this as much as possibly can be done. We know what we are doing. We are here to help you with the ATO and with your businesses. Keep talking to us. This is hard for us all. There is help out there. We know how to access it and we can help you access it. So enjoy your day. Thank you very much. And we will catch up with you very soon. Thank you.